Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Wednesday, halfway through the trading week. Welcome to Modern Investing Techniques, episode 64. I'm Patrick in Vancouver. Today is June 3rd, 2026. Midweek, let's reassess this week's positions and look for fresh setups. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. American buyers are flooding Canadian real estate searches, creating a potential tailwind for TFSA holders eyeing cross-border property exposure. Markets opened mixed this morning, with the S&P 500 at 7,610, up 0.1%. The NASDAQ Composite sits at 27,094, essentially flat. The TSX Composite is at 35,170, up 1.3%. Sentiment is tempered by fresh U.S. tariff proposals on 60 economies and ongoing Middle East tensions. The simulated portfolio sits at year-to-date plus 1.44%, and since inception plus 1.44%. That compares with the NASDAQ year-to-date plus 16.60%, and since inception plus 21.09%. The result is alpha of minus 15.16% year-to-date, and minus 19.65% since inception. About 14 days ago, we picked PYPL on durable free cash flow and buybacks. The modest close taught us that valuation support alone rarely drives sustained outperformance without a fresh catalyst. With broad market beta clearly dominating, let's examine a targeted strategy designed to capture policy-driven premiums instead. Geopolitical premium investing involves overweighting assets that benefit from policy shifts, such as tariffs or critical mineral demand, rather than broad market beta. Today's proposed 10 to 12.5% duties on 60 trading partners and the Canadian antimony discovery highlight how quickly supply chain security can reprice entire sectors. Investors can implement this by screening TSX-listed miners and processors for non-Chinese sources of defense-critical inputs. Then size positions at 3 to 5% of a TFSA to limit single-name risk. The approach has historically delivered during trade war periods when domestic content rules tighten. It carries elevated volatility if diplomatic tensions ease. Use free government mineral lists and company filings to confirm jurisdiction before entry. Always layer in volume confirmation above the 20-day average before scaling. This policy-focused lens pairs naturally with today's concrete catalyst trade. Our practice investment of the day is a simulated weekly hold on NVO, Novo Nordisk. The catalyst is Novo Nordisk beginning to roll out the Wegovy pill in the UAE, marking its first non-US launch. The stock has traded above its 50-day moving average on daily charts with volume running near the 20-day average. Nearest support sits at the 50-day line. We place a 6% stop below the recent swing low to manage regulatory or reimbursement setbacks in new markets. The target is plus 3% to plus 6% over the 5-day window if uptake data remains positive. Confidence is medium because we have a single clear catalyst with supportive sector rotation into weight loss names, but limited volume confirmation so far. This setup demonstrates how to evaluate an international expansion catalyst without relying on U.S. earnings data alone. While we wait for the 5-day outcome on NVO, here's how to evaluate the earnings data that will ultimately confirm or refute such moves. Imagine you bought a healthcare name last week after it announced an overseas product launch. Your order filled at the open, but the real driver was whether management's forward guidance exceeded consensus and whether free cash flow actually covered the expansion spend. Revenue growth shows top-line momentum, while EPS reveals how efficiently costs are managed. A company can post higher revenue, yet still miss on EPS if margins compress. Check the balance sheet for rising long-term debt relative to cash. Compare operating cash flow to reported net income to spot aggressive accounting. The biggest mistake retail investors make is fixating only on the headline beat or miss. Instead, always read the management commentary section for explicit language on guidance changes and capital allocation before deciding to add or trim. Applying these same scrutiny standards to yesterday's trade helps explain its modest result. Yesterday's flash trade was on SNOW with a momentum entry on a raised revenue forecast plus major AWS partnership. We entered at $237 at market open and exited at $239.20 at market close. The trade gained 0.93% for a simulated profit of $9.28 on a $1,000 position. The NASDAQ was flat on the day, so the trade produced plus 0.93% alpha. The modest single-day gain confirmed the partnership catalyst worked, but momentum faded without sustained volume. This is the exact scenario where our earlier rule about volume confirmation would have helped. The new rule is to always require volume above the 20-day average before entering momentum trades on partnership announcements. To surface similar catalyst ideas faster, here are two practical screening tools. Benzinga Pro filters top-performing monthly dividend ETFs and high short interest names in real time. The platform's news integration surfaces catalysts alongside the screen results, reducing the lag between idea generation and execution. It is best suited for active TFSA users who want one dashboard instead of juggling multiple free sites. Interactive Brokers' TWS scanner builds custom scans for stocks trading above their 20-day volume average while staying under a chosen PE ceiling. Canadian users can route orders directly to Canadian exchanges without extra FX fees on USD names. The free paper trading account lets investors test scans before committing capital. While these tools help surface ideas, here are today's fastest moving developments. Greater Toronto home sales rose 6% in May, with prices easing. This signals a modest re-entry window for first-time buyers using FHSA funds. Add XIU to the watch list for any further price softening below the 50-day moving average. Nestlé completed the full buyout of Y-Food. The acquisition expands Nestlé's ready-to-drink nutrition lineup and signals continued M&A appetite in the consumer staples space. Consider trimming European consumer staples exposure if Eurozone tariff headlines intensify this week. The U.S. proposes fresh tariffs on 60 economies targeting forced labor practices. New duties could raise input costs for Canadian manufacturers with U.S. supply chains. Hold CAD cash for now, with no rotation signal yet. Novo Nordisk launches the Wegovy pill in the UAE as the first non-U.S. rollout. Watch for a retest of recent support before adding healthcare exposure. Before we wrap, open your brokerage platform, pull up the 20-day average volume for any healthcare name already in your TFSA, and compare it to today's volume. If today's volume is below average, note the stock on a wait for confirmation list before considering any new position. Tomorrow, I will check whether NVO volume has confirmed the international launch catalyst. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow, and before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give OmniView a listen, a balanced daily world news briefing that takes every side seriously. You can explore the whole lineup at nrnnetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?